All right, I'm excited. We're going to kick this off. Actually, I'm actually going to be hosting the next panel, so I'm pretty excited. We're going to be talking about returning customers, the ROI on returning customers. So please welcome to the stage my panelists. So we've heard a lot already. I mean, I think it's pretty well known that returning customers are the key. And so that's why I'm excited to, bring up, two industry legends, Eric and John, and also Seth with I Am Green. So it's pretty excited to have them on stage. It's fair. He beats me in golf all the time. So, it's a little thing I can do. That's fine. I'm okay to admit that. But, we're really excited, when we're talking about returning customers, because as we've heard, they're really the backbone. And so I want to do something different for this panel. I wanted to try, really diving in to, some different areas. Everyone probably sets up email blast and they send out different text messages and things in that net. They have their call center agents call, but there's more to the returning customer's experience than just, after the loan's paid off. So we're going to kick it off a little different. So John, the customer's changed a lot in recent years. So tell me a little bit about, just the upfront process, the first time experience for a customer coming in to a lender.
Sure. Well, first of all, let me start by saying thank you. I think it's been a lovely conference so far. Yeah, right. The speakers I've heard have been great, and entertainment was lovely. A little shaky on the meetings, but the mermaids rocked. Anyway, glad to be part of this. How have consumers changed, and what is the expectation a little bit? I think, first of all, in a breakout session yesterday, I mentioned that everybody has sort of changed a little bit from a consumer standpoint. We all have Netflix accounts and Amazon, and because it's too much work to get up and drive to the movie theater, I guess. I think a lot of us have ordered things on Amazon because you don't want to get dressed and go out to the store and buy it. I saw some information that 7 billion same-day or next-day deliveries were made by Amazon in 2023. That's a lot. There's only 340 million people in this country. So I think it's clear that consumers expect easy, convenient, frictionless is the big term, right? But as you look at things like this, I think as it relates to the loaning or the lending process, borrowers expect it to be easy, to be simple, to have call center agents communicate effectively. Simple things. There was another survey. Again, won't do all survey daily here. There was a survey by Payments Information that came out with a nugget that said 22% of younger borrowers have abandoned a loan application in the process because it was too cumbersome. It's a big number, 22%. An additional 20% abandoned it because they had to scan in and submit documents or key punch information that was just too much work. That's 42% of consumers that are coming in. That's like coming into your store, buying a handful of things you sell. You get up to the cash register, and it's so clunky, you just put it down and leave. So I think the lessons here that consumers today expect it to be simple, easy, transparent.
Okay. No, I mean, that's great points to start. So just stay with you for a quick follow-up. What are some of the things that lenders and servicers in the space are now doing to provide the less friction type of these customers that requested?
Well, I think simple is one thing. To me, friction means, or frictionless rather, really means intuitive. If you think about it, again, a lot of us have iPhones. Anybody here find the user manual for their iPhone difficult to understand? That's a trick question because, there is no user manual for an iPhone. Because Steve Jobs, when he put an iPhone out, said, if you need a user manual to figure this out, we're not selling it. It has to be intuitive. And that's what people expect today. And so when your call center agents are speaking with people, when they're explaining the process and things, it has to be simple. The other thing is, most importantly, it has to be fast. And so there are a lot of tools out there. I think some of the traditional, I'm a payment processor. So when you look at it, the traditional payment methods, ACH, same day ACH, wires, and then of course, push to card, all have advantages. They all have disadvantages. I won't bore you with all the specifics of it, but I think the instant funding to the consumer is really critical today. The newer product that we're really behind is FedNow and Real-Time Payments Network. Combining those two to be able to provide a safer, faster access to funds is really critical. I mean, you get on the phone, on average, folks using that are getting their money in 8 seconds or less. The longest funding we've had from the time your agent presses fund is 27 seconds. And those funds are immediately available. Unlike some other tools where the bank can put a hold on it, those funds, they can spend them right away. So I think that's critical.
No, and I think you bring up a good point. And, the difference in the new real-time funding to push to card is what we mentioned. There's less friction. So, the lead providers do a great job generating customers that, lenders and services want to acquire, but also collecting the debit card information is very difficult. So that information is not passed. So therefore, collecting that would be a whole friction point. Now you can do it directly through ACH, which is great. So it's a great segue, over to Eric with EPCVIP. You guys do a really good job of generating customers and getting, your customers that take loans to come back. So any advice do you have for lenders when they are setting this up on trying to personalize the message to get them to come back to them? Because they might have other loans elsewhere too.
Yeah, personalization's key. Anybody in this industry knows a lot of these people have been, it's a saturated market. These people keep coming back to the well, trying to get more water. And once you have that much of a saturated market, unfortunately, their remarketing channels get saturated as well. So each of these people who've submitted their information multiple times often is getting hundreds of emails, from various lenders. So really standing out is the most important thing if you want them to click on your specific message. So anything from the application data that makes it unique, makes it stand out. I live in Calabasas, California. So it's like, if something in the messaging is specific to Calabasas, it catches my eye versus, I have 50 other emails that just say loan, 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 loan. It's specific to Calabasas. Or I use Chase Bank, saying something about Chase Bank in the message, anything to get your message to stand out different, but specific to me as a person, as a consumer, I will catch my eye. That's my recommendation to a lot of these lenders.
All right. No, it's great. We heard yesterday on one of the panels, somebody was asked, a servicer was asked, what's the 3 most important things that he needs? Data, data, and data. So a lot of our customers really dive into the data a lot, and you guys do too. So how should a lender or servicer be utilizing data to really drive that customer experience and bring them back?
I would say data is 2 parts. One, deliverability matters most. If you're not in an inbox, if you're in spam or junk, it's a completely different game. So part of data can be utilized to preserve your inbox ability. And then the second part is you want engagement. So the first part is understanding who's clicking, who's not, who's worth some money, who's not. If you have somebody in your system 360 times and he never clicks on an email or an SMS, stop messaging him. If it's a new, fresh person that's in your system one time and he's clicked every time, you can go a little more aggressive on those people because the juice is worth the squeeze. So that's the data part of, don't message people who aren't clicking. Don't just blanket fill up your queue and just keep pounding these people over the head. You have to, extract people from that list who don't want what you're selling, or try a couple different approaches to get them to click on what you're selling. And if it doesn't work, get them out of the list and focus on who's worthy of your effort. So that's the first part of the data. Second part, I'll just give you like a little baby bit of secret sauce is, look at when people engage messages and, time of the day. I wake up early. I'm up at 5 every morning and I'm checking my emails and I get a lot done before the noise starts, and that's when, that specific to me, that's the best time to get something in front of me where I'm going to engage it. Everybody's not equal. Some people surf the internet while they're at work. Other people get home early and check their email. Other people, when everybody goes to bed, apply for loans and whatnot. Look at those timestamps, market to me when I'm engaging those messages. That's a couple little tidbits for you guys.
No, and I think that's great information. I think, when I'm talking to a lot of customers in this industry, the key metrics, they said we sent out 500 emails to returning customers. We got 10 customers back. Oh, we're so excited. But there's 490 that didn't respond. So if you keep doing that, your email delivery rate goes down, and those numbers over time will drop. And so I think you bring up a great point, to make sure that you're sending messages to engage customers, and then also pivoting if things are not working, and, reaching out to these customers in different ways. So it's actually, a segment that is almost perfect to pivot here, is because IM Group, they do a lot of direct mail and they do it well, but I know a lot of my customers don't use direct mail for that purpose. Seth, you give it a little insight into the retention program with direct mail?
Sure. This industry is interesting compared to some of the other shows I go to and some of the other industries that this question keeps coming up, that mail, is it a fit for this industry? Well, financial services has been relying on mail for as long as time. It responds really well. And with financial services, especially today with advances in AI, people are more and more fearful of fraud and scams, phishing. So it's very important to build that trust, which you can get out of direct mail. Yes, it's a higher upfront cost, but 84% of marketers across all industries are going to agree that it's the highest return. It takes a little bit of dialing in, data. Got to look at it. You got to find the segments that work. But the key is to, pay attention to what kind of trust you can build with that messaging. It's going to build loyalty. It's going to build a lifetime value that exceeds digital channels 2 to 3x. It's different in this industry because we've relied so heavily on lead gen. But I think it's something that it's funny to say, but I've heard several lenders here talk about evolution. Well, I think part of that evolution in this industry is direct mail. It's working. It has worked for a very long time. And now we have the tools and the technology to produce these mail pieces very efficiently in a cost-effective manner that makes it available to lenders of all sizes.
No, and you bring up some good points. I mean, it's, not to say anything bad about IM Group, but, there is a perception that mail is dead, right? And, you hear the post office pieces drop dramatically, but I can tell you from what I've seen in the customer experience side is that, they might take this piece of mail. They might, okay, I don't need it now because remember, we're selling, the lenders are selling money. And so they might not need the money. It's emergency cash type of lending. So therefore, maybe it's up there. So that way, if something goes wrong and they're like, oh, I need quick, they don't have to go through their email. It's sitting right there. They can find it. So it actually does a pretty good job of, planting a seed. And that's the one thing that we have to remember when you're talking about returning customers is that they're going to need the money when they need the money. So therefore, they might not need it the minute they get the email or the direct mail or the text messaging, but they're going to need it. So therefore, if you've got the seed, if you've got the hook, they're going to come back. Seth, follow-up for you. We've heard a little bit on personalization and friction, right? So, but when you're thinking of mail, is there ways to help eliminate that in the mail side too?
Absolutely. We do a lot of pearls, personalized landing pages. We use QR codes on almost every mail piece now, which makes it very easy. You can do some free popping of any of the information you have on the customer when they click on the QR. But that's another nice thing about mail is you've got a lot of real estate in a mail piece to personalize. There is a fine line. You don't want to creep people out with a little too much personalization. But and another thing about mail is these customers, they're not getting a whole lot of offers in the mail. So when you can make that customer feel special with a VIP offer for a returning customer, they're not getting that from anyone. they're not getting a new credit card offer from Capital One or Citibank or American Express every day. Now they are getting mail from your competitors. So if you want that customer to come back, use all your channels available and get a mail piece in front of them.
No, you bring up a good point. I mean, and this goes back to the other remarketing attempts. I know a lot of customers that use call centers a lot, and they're like, they never answer the call. Well, probably most of their calls are getting their collection base. So therefore, we do have, our customer base has some credit challenges. So therefore, they're getting a lot of collection calls, or specifically, their emails could be collection emails at the same time. So therefore, pivoting a little bit and going back to what Eric said is finding the time. They're normally checking their messages, and you might have a better penetration rate. So I think that's definitely important from that standpoint. So, spinning back around, John, you've worked with a lot of lenders for years. What are some of the major mistakes you see lenders make when it comes to their remarketing?
Mistakes. Well, I would say one is if you're trying to get somebody to return as a customer, convenience, again, going back to that theme, one of the ideas is being able to have folks reapply online. And again, if that's something that you can accommodate, I think it's great. Again, with integrations into some of the software packages, you can integrate some of these tools, including like real-time payments, where you can actually have somebody go online, fill their work out, and get their funds right away. If it's easy, if they can do it from their phone, and then they have immediate access to that, that's a big deal for somebody applying for money. The other thing so a mistake is not offering an online option, by the way, that can also be accessed 24/7, 365. The real-time payments FedNow network is 24/7, 365 and holidays. So again, people don't always need emergency cash between 9 and 5. So I think that's pretty important to be able to offer that. The other thing is, if you have a really bad experience the first time, you're probably not going to go back. As an example, if you're having issues, part of the reason we're all concerned about the small dollar rule and the 2 payments rule coming into play here in the next few weeks, I think if you're working with your payment processors, you need to have some options on how to handle those things. Continually not, and even if it doesn't get it passed or enforced, which is an option, who knows? I think if you're working with folks who have built tools that can check the balance in that account before you run the payment, it's going to keep the number of NSF and overdraft fees down for the consumer. Nobody likes to see their account overdraft and have additional fees. So if you're working with a processor that, again, I work for Viking, that's what I'm familiar with, but we've integrated a number of the open banking partners that are here that you guys may already use, where you can send a file. We can check real time right before we deposit that, whether there are funds there. It's a real advantage to a consumer. If you're continually getting NSF fees, overdraft fees, I think you're less likely to want to borrow from that same place. And then lastly, again, it sounds like a commercial, but we have a tool to do some fraud detection at the front end. Again, being able to detect whether that account number has been victimized by fraud previously. So if you can scrub those out, nobody wants to be defrauded if you're able to pull those things out early. Again, additional white glove service for your returning customers.
No, and I think you bring up a good point there. And I can cover this a little bit, is that it's the customer experience. It's just not the upfront getting the money. It's not the back end getting the money. It's the middle. Like if they have a hiccup, with someone, these are, high cost loans. So be flexible, let them, maybe skip a payment here and there. The ultimate goal is to get them, to be a successful customer and pay off, because you can't normally get a returning customer if you charge them. So therefore it's a good idea to work through the process. use the tools in the LMS to make sure that, there's, no conflict. Because as you mentioned, multiple ACHs constantly going after money. These customers do remember that, and they do remember a bad experience that then they would, definitely want to, look at somewhere else if they have options. And some of them do have options. When we're looking at the data, Shannon covered a little bit yesterday, a lot of these customers are customers with multiple of our customers. So we do see them floating around. So there are choices that they get to make. And from that standpoint, and you also brought up some things on the process to get them back, but I don't want to steal Eric's thunder. So I'm going to ask you a question here on, what are some of the things, that our customers, without giving away all your secret sauce, that they can do to their websites and the process to really help them increase those numbers. So they finally got them to click, yes, I want the money. How can the lenders work to make sure they get through the application process?
Basically, these consumers, whatever gets through your underwriting in the first place, tells you whatever it needs to tell you. You're taking a risk when you lend the money, and the people who make payments, that's your gold. You're mining for gold, and you found them. A lot of the risk is taken out once you've seen this person's, payment history. So you can ease up on different things. You can give more favorable, second bites at the apple, and, highlighting that, is probably the single best thing you can do to get them that. Lower your payments, longer payment terms, larger amounts. Like once you found that gold that makes the payments religiously, doesn't have any bad nicks in their first go round. I think products that speak to that, everybody was okay with the more aggressive terms that got them into your ecosystem, offering them second chance, better options on the return after you have some sort of history, I think is the single best thing as bait to bring them back.
No, and you bring up good points there. And, our customers, they, like you said, we've talked about it, they're in need of emergency cash. So, that's what the services and lenders are here to help. One thing I've noticed working with a lot of lenders in this space, and we sort of talked about it on the friction side earlier, is it needs to be a smooth process. So if you send them an email, make it one click, a short verification strategy, get them right to the thing, real-time funding now. Hopefully you can get money in your account in under a minute with like 4 or 5 clicks, right? And that is the new era we're in. So therefore, I always joke, many years ago, I was at another fintech conference, and they were so excited because they were finally funding, it's only a few years ago, they're finally funding people in 3 days. And I was like, well, the industry I've been in, we've been funding people next day for years. And now here we are, we're now funding, without debit cards, we're ready to go. And I think that's really the big thing as we move forward, is lower the friction. No one likes to log in. I know if I'm trying to watch something on my phone and I forgot the app my password to Hulu, I'm done. I'm going to Netflix. I don't have time to try to reset that password. And I think you see that a lot from our customers, from that standpoint, I guess from your customers. So I think it's a good idea to really, really dive into that and make that whole application process easy, especially if they get a text. We've got SBT here today. If they get a text, click, application, basically few verifications, process done, you're good. So I think that's really key when we're looking at returning customers from that standpoint. So we got a few more minutes left. So Seth, real quick, we talked about engagement, and Eric mentioned that, hey, after a while they're done, right? So on a direct mail, is there any benefit on trying to get reacts from further back that maybe are no longer in the email system?
It is a little more challenging, but the reality is 20 to 30% of these customers, that's best case, they're going to move out of subprime credit over their lifetime. So they're always going to be a customer. If you're not getting in front of them, I guarantee your competitor is going to be getting in front of them at some point. As the data gets older, there are things we can do to clean up the data and get accurate addresses, accurate email addresses, and phone numbers. But the key is, that customer is really never going to move out of this product. Chances are. So stay in front of them, pay attention to the data, look at the segments that are working and focus on those. You're going to have segments that just aren't going to respond to direct mail. You're going to have segments that just don't respond to digital. Pay attention to those things. Look at it. I think, we've got an integration coming up with you where we'll be able to set some real-time triggers for when customers are paid off or when they're 30 days past due. That's going to give your clients a lot of access to that data. And I highly suggest you look into it deeply as you can.
No, you bring up good points. And, it's definitely something when you're working with these customers, the contact. And you mentioned a good point, 20%, graduate, which is what the ultimate goal would be. Because, there's 20% leaving and there's 30% coming back. So it's fine. We'll have our customers. But from that standpoint, there was a big subset of the customer returning list that are not your customers anymore. So you do have to take that advantage here and understand that. So wrapping up, I'm going to give you guys 1 minute each just to really go through your final thoughts, things that you can really do. Because everyone in here, all our customers, all the lenders and servicers understand that the key to growing your business is with returning customers and getting that repeat business. So Eric, we'll kick off with you. What's 1 minute? Tell me what best ideas you can give them at this time.
Figure out who is engaging, message them at the time they want to be engaged, and message them with things that speak to them as a consumer. You have certain amount of data on their first journey through your ecosystem. Learn from it. Give them things that will hopefully make them take action. It's all about call to action, but it's also about preserving your deliverability. So if you're doing too much across the board with no intelligence behind it, it's going to hurt your deliverability. Then none of the other stuff can matter. So worry about deliverability, worry about who you're messaging and the value of those people. Get rid of the junk, and whoever's left, message them intelligently with cultivated messages that speak to them as consumers.
No, I think that's perfect. Back to the personalization thing, really understanding your customer. I think that's key to really driving those numbers. Seth.
Get in the mail. Talk to some of these other lenders in here. They're doing it. They know it works. It's great for reacts, especially in financial services. You're going to make a customer, so especially pay attention to the data. Make sure you're getting, like Eric's talking about, get in front of them where and when they want to be sold. It's not just going to be a one-size-fits-all approach to these campaigns, whether it's email, digital, or mail. It's timing is important, and the right messaging. It's a BIP offer. Make them feel special. They don't get that very often.
John, bring us home.
I guess I would start with saying you're not going to get a returning customer if you don't get a customer to start with, right? So have initially, when you're making that offer, people expect it fast. So we looked at all the options. I discussed different methods, but I think look hard at FedNow real-time payments. They're integrated with Epic and Infinity right now. Less expensive, faster, more reliable, less fraud, and immediate access to the funds. So that's a big deal. Then use some other tools that are going to keep from running up NSFs and fraud on consumers. So those are how you keep them.
Pretty simple. So, just to wrap up, I think everyone is pretty clear. Returning customers are key. And so the goal is mix it up, understand your customer, understand the data, try new things, and then realize when things aren't working, exit the plan. So I think this was some great information. And gentlemen, I appreciate you guys for joining me today.
Thanks for having us.
Oh, thank you, Sid.